Choo-choo! All aboard Australia's property Ponzi scheme. Now, in this video, we're going to be breaking down into 4 parts Australia's property Ponzi scheme. We're going to be talking about, is this Ponzi scheme real? How does it allegedly work? What are some of the risks and consequences to homeowners and investors? And what can you do about the situation that Australia's property market is in for your own family and your own choices? Now, my name's Luke and I talk all things real estate, renovating and financial freedom. And I'm blessed to be in a financial position where I'm becoming financially free. Emily and I, my wife, my now late wife, have been building a property portfolio the last decade to try and create more choices for our family. Buying and building a property portfolio was not about having a fancy car or having luxurious holidays. It was about spending time with our kids who are 3 and 1 years old. It's about enjoying time together, not having to worry about electricity bills so much or food that you buy, and being able to buy organic food rather than, standard produce and things like that. And so to give ourselves a slightly higher quality of life and more time and more choices in our day-to-day lives as well. And so let's break down Australia's property Ponzi scheme and how it's affecting everyday punters or everyday Australians who are looking to buy their first home, who are mum and dad investors, and how the corporations are involved as well. So is Australia's housing market a giant Ponzi scheme? Well, yes, I think it is. We are living in a big bubble, but let's first define what a Ponzi scheme is. Ponzi schemes are generally defined as fraud, promising high returns using money from new investors to pay old investors with no real underlying profit, and this collapses when the money stops. Now, this is actually a definition provided by the ATO's Money Smart. And if you read the end of that definition around what a real Ponzi scheme is, it says it collapses when new money stops. Now, what we have in Australia is a load of money printing. Now, we've seen from the dot-com boom, the global financial crisis in 2008, 2009, and COVID most recently in the 2020s, that the government and the RBA and the infrastructure and systems of governments are willing to turn those money printers on. Not just Australia, but the global money printers, the USA, China. These big countries are printing a ton of money to keep up with the debt that they've taken on, and this just floods more money into the markets. And so that initial definition provided by the ATO of that a Ponzi scheme collapses when new money stops. When we look at the property market, this is why I don't think the bubble's going to burst or the Ponzi scheme's going to slow down, because there's always this new money, there's inflation coming in at 2 to 4% ideally, and property tends to outperform inflation. And the reason is people want scarce assets like real estate for a roof over their heads and to be close to schools and close to work and close to infrastructure. And so it is a Ponzi scheme that property is going to continue to go up and outpace inflation based on historical data from the last 30 years. But I don't think it's going to collapse anytime soon because of the structures and the systems that are in place and the money printing that's going to continue to come through into Australia's economy, as well as the growing population through immigration, which boosts the demand side. So the argument is that Australian property prices aren't driven by rental prices, they're driven by inflated demand. And I would agree that that is true, that the rental prices you see in Sydney and in Melbourne and in central Brisbane tend to be compressed. You've got rental yields, people are talking about Melbourne at the moment, you've got rental yields that are 3 to 3.5% on a gross yield basis. And if you're paying a 6 to 6.5% interest rate, that property could be taking $20,000 a year out of your pocket. Similar in Sydney, I've seen or heard of 2% gross yields. People have $3-4 million homes that only rent for $1,500 to $2,500 a week. You get that in central Brisbane here as well, within say 5 to 15 k's from the city, where the house is worth $1 to $2 to $3 million and the rents are only $1,000 to $2,000 a week. And so you're getting compressed yields, which don't actually reflect the value that the market is putting on those properties. The reason those properties are valued so high is the demand side, and people are willing to pay higher prices for those assets that have good underlying value and are scarce, and then meet the requirements for what they're looking for long term. Now, a Ponzi scheme relies on new entrants, and this is where the immigration talk becomes very interesting, because Australia's immigration has been high, and it's expected to be high going forward. Now, I'm an 8th generation Australian, so my parents were part of the first colonies that came to Australia. Now, part of Australia's multicultural society that we live in does encourage immigration. And so people talk about opening up the floodgates or allowing too many people in. Property is a game of supply and demand. And so allowing a large number of immigration to occur is increasing the demand side, but Australia is also needing to fix the supply side. And so I want to talk about the supply side because I think the demand side and immigration gets a little bit of a bad rap because we're going to continue to let hundreds of thousands of immigrants in each year because that's what the Australian government wants, to boost GDP, to get more skilled labour, to get more accountants, more lawyers, more doctors. You see a lot of immigrant doctors coming over as well. And so let's talk about the supply side to Australia's Ponzi scheme. With the supply side of Australian property, supply is so expensive to come to market. I've actually been looking and using, and I'll do another video on this, but looking at hypothetical scenarios of just bringing land to market in, say, 60 kilometres from Brisbane CBD. So let's use this scenario where we're 60 k's, it's a long way, say an hour and a half from Brisbane CBD, and you go inland. There's lots of land in Australia. So why could we not create cheap streets and addresses for people to buy and build their own homes? The problem is you need to pay infrastructure charges to the local council. You need to then run water, sewer, electricity, telco, all just to get these lots titled and certified, ready to go to market for sale. And then you need to add a home on top of that. So a video I'm going to break down very soon goes through the cost of just bringing the land to market, which is hundreds of thousands of dollars. And then on top of that, you've got the construction and labor costs where materials are very expensive and tradies are very, very expensive at this point in time because we really do have a trade shortage moving forward. So what this means is you're looking at around $810,000 to get both the house and land in these new estates, which have a functioning road, have functioning water, sewer, and infrastructure. You're looking at around $800,000 in terms of the sale price for a developer to make some money or margin, which is around 10 to 20% for the developer margin so that they can run their business. Now, let's say we did it on a cost basis on the supply side. So we remove the developer margin. They're a non-for-profit developer. And even if you look at that scenario, they'd still cost around $650,000 to $700,000 to bring this product to market. And so for an Australian who's earning an average wage of $100,000, that is still a 6 to 7 times multiple to bring a basic house and basic land in the sticks. That's considered in the sticks in Brisbane, about 50 to 60 k's from the city. And you're going to be west, where you haven't got all the other infrastructure. You haven't got the bayside lifestyle or the busways or the established train lines, which people want as part of their work and lifestyle. And so I think with this Ponzi scheme, it is back to the core fundamentals of supply and demand. Demand is going to continue to rise as Australia's population continues to grow, with immigration being the government's policy, whether it's Labor or Liberal. I don't see that changing, that they'll keep the floodgates open, in quotation marks. And the supply side is also very interesting because it's so expensive to bring this stock to market. And so this is where I think that the fundamentals of property being a scarce asset, the money printing on top, this is how people categorize, and I categorize, that Australia is running a giant Ponzi scheme, but I don't think the bubble is going to burst. So let's talk about some risks and consequences from first home buyer perspective and from a mum and dad investor perspective and from the corporation's point of view. Now, first home buyers have been giving options to use their super, to break into the market with 5% deposits, to partner with the government in helping them buy their home, even giving away some of the equity to allow the government to make gains on their house purchases as well. For first home buyers, my opinion is to break into the market where you can. I think if the government is going to allow these schemes to take place, 5% deposits and first home super saver scheme and stamp duty concessions, these things are only going to prop up property prices. That's the truth, in my opinion. But you need to use what's at your disposal. So if you're a first home buyer, rather than saying, oh, I don't think this is good for the property market, if it's available to you and it's part of the schemes and processes and laws that we have in place, then I would personally use those to your advantage because you're trying to create a better life for you and your family, and you've got to start from where you are today. So Emily and I, we were on probably mediocre wages. And there's a full video breaking that down from the first 5-6 years of our property portfolio. And we roughly earned the same wage, starting around $50,000. That grew to $60,000, $70,000, $80,000, and then $100,000 across the first 5 years of my accounting journey, because I worked as a chartered accountant in an audit firm and then in the commercial space when I got that jump up towards $100,000. Now, today's average wage across Australia is around $100,000. And so I still think it's possible for people to save and break into the market. And if I was a first home buyer, I'd be using the First Home Super Saver scheme. Emily and I used that, and we saved about $3,000 to $4,000 of taxes in saving for our first home deposit each. So we've got about an $8,000 to $10,000 benefit there. And if you buy a house on 600 square meters with a $600 to $700K purchase price, that is still possible here within the Brisbane area. When I say Brisbane, I mean Greater Brisbane. So, for example, using Brisbane specifically, if I was a first-home buyer, I'd be looking to buy a place in Logan or in Ipswich because they're the more affordable local councils. And I'd be focusing along the infrastructure, along the train lines, where it's sub $700,000, where I can add a bit of value and still get some good land size. And so if I bought a house for $700,000, I could put down a $35,000 deposit, I could avoid paying stamp duty, and I could use the First Home Super Saver scheme to help fast track my deposit. So there's 3 things that you can have as a first home buyer to allow you to break into the market and get your start. Now, it is going to be more and more expensive to break into the property market. And so this is where people are calling it, and myself in this video calling it a Ponzi scheme. But my opinion is that rather than being upset at the system, work out how the system works and get on board. That's why I opened the video with, a train analogy, choo-choo, because the train's going to keep moving and you're either going to work hard and save diligently and maybe do some value adding yourself or get some family mates to add value to your first place, and then work your way up to, towards a dream family home, or work your way up to building up a few investment properties to start building a property portfolio. And so that leans into the families. How can families look to grow and scale a property portfolio based on this environment? And so this is where mum and dad investors like myself and Emily are trying to create more choices for themselves and their families. The statistics show that not many people are able to buy multiple investment properties. It's quite a difficult thing to do. It's hard to get the money from the banks, working with your broker and the banks, as well as acquiring the right assets with the right yields and with the right growth potential. And so I like to go back to the fundamentals or the basics. When we're looking to scale and grow a property portfolio, look at that supply and demand equation. And as far as the property goes, you need to start with what you can afford. So I like to talk about 2 things. You want to know your finances and your strategy to grow this property portfolio to give yourself more choices. Again, like I said earlier, it's not about having a $500,000 passive income, which some people go out there and achieve that, and they're less than the 1%. But for the everyday Australian, buying between 2 to 4 investment properties and maybe selling one of those and having 3 investments in retirement is pretty realistic, and that could give you around $150,000 passive income if you're able to buy and create some granny flats on those dwellings as well. But start where you're at today. So go down to find a broker, find a bank that's going to work with you and give you a borrowing capacity. Once you know that capacity, then work out what your strategy is, because unless you've got the finances in place, you're not going to be able to take action. And so let's say you go down to your local broker. You can go over to purposeproperty.com.au and have a chat with my mortgage broker if you want to have a chat with Nevada and the guys at Cube Home Loans. But in that process, they'll give you that ideal borrowing capacity, and you could have a look at 3 different banks and you'll get slightly different borrowing capacity depending on the interest rates. Let's say I've got $1 million. Now, some people will look at splitting that million into 2 $500,000 regional purchases. Some people will spend $1 million out the gate. Some might spend $800,000. My personal strategy, going back to what Emily and I did when we bought our first home in 2018, is to put the big rocks in the jar first and then fill the jar with smaller rocks. And so that's growth first, cash flow second, in my opinion. And so I would suggest to people that you buy properties with higher growth potential and good underlying land value. That typically means at least 400 square meters in inner city locations and 600 square meters in middle and outer ring locations. And then you're buying properties that also have some value add potential and maybe some granny flat potential. And if you've got those levers that you can pull on top of that property purchase, it allows you to fast track the journey. So buy those capital growth properties first, so buy 1 or 2 of those, and then move to cash flow assets. That's the general strategy. Now, it's going to be different for different people. That's why you need a tailored approach and strategy. And so if you do want to sit down with myself and you're looking to buy a property in Southeast Queensland, head over to purposeproperty.com.au and you can sit down with myself for half an hour, have a free chat, talk through your current situation and how we might be able to help you secure a property here in Southeast Queensland in the next 6 months. And I'm honest in saying that Southeast Queensland is the spot that we specialise in, but there's lots of markets across Australia. And so if you decide to buy in Southeast Queensland and you want a buyer's agent to help you through that process, that's what our business services. But if you're going to buy in Melbourne or in Sydney or in regional Australia, I would work with a local buyer's agent or do it yourself, because it's certainly possible to do it yourself and start and scale that portfolio. For me, with mums and dads, it's all about taking decisive action, and those little 1% steps help you grow that equity and grow your asset base, and then you take action again when you've got the borrowing capacity. Now, it's very, like I said, customized to your situation. So you need to work closely with your broker and your buyer's agent, or certainly your broker if you're not using a buyer's agent, to make sure you can continue your investing journey. And then long term, you're probably going to sell one or two of those assets, add granny flats to the others, or sell them completely and get into commercial property to give yourself the yield play or the cash flow at a later date. So looking at my personal journey with Emily and I, we bought a couple of houses here in Brisbane. We renovated every property that we bought. Which was tough. It's hard work renovating, but that allowed us to fast track our property journey because we created more equity by adding value through some sweat equity. And then we bought a unit block in Coffs Harbour after buying 3 houses in Brisbane, and that balanced out our growth versus cash flow. So that's a house and 3 units in Coffs Harbour, and that had stronger cash flow but less growth potential. And then I've come back the other way and we bought 2 houses last year, one in Moreton Bay and one in Logan City. And now moving forward, I'm looking to buy some other assets with some more development potential to again force some stronger cash flows towards the end game of our property portfolio. Everyone's going to be different, but for mums and dads, look at Australia's Ponzi scheme, make an educated and informed decision if you want to be a property investor and you want to create more choices. You could also look at shares and you could also look at crypto or gold. But in my opinion, the reason I chose property as my investment vehicle is it's something I can understand. It's tangible, it's physical. I can understand that people will want to pay more for property in the future, especially if it's in scarce locations or scarce block sizes and areas. And so the leverage piece as well, being able to scale and grow a property portfolio, all of that coming together was the reason that I chose property investment as our vehicle for wealth creation. Now let's talk about the corporations in this giant Ponzi scheme of Australia's property market. This is where it gets really interesting. So the top 1% of property investors own about 25% of the rental stock in Australia. And I think that's going to grow because they have access to the lending, they have access to the banks, and they generally run big businesses. And this is an issue in the US where we're seeing big corporations buy and build entire suburbs. And so I don't think big corporations are the ticket or the way out for Australia moving forward. I think it's about creating more supply at an affordable price point. And I would love to explore in the future. I love tiny homes, and I love the idea of bigger lands rather than these 300 square meter dystopian blocks, 600 square meter plus blocks where families can genuinely have a home and space to live on and ride bikes and community. The problem is the cost of that coming to market. So these big corporations are able to have the systems, the processes, and the lending to build entire suburbs. And they do that in that cookie cutter dystopian manner. And so they make a lot of money doing that, and then they can roll all that money into more projects and making more money. And so your everyday Australian can be priced out by these big corporations like BlackRock, who are able to do this at scale. And so moving forward, this is probably my biggest concern, is that the everyday Australians, the mums and dads who are trying to create a better future for their family and earn $100,000 to $300,000, $500,000 passive income to create more choices for themselves and their family, are going to be overrun by big corporations buying and building up entire housing suburbs or creating massive amounts of stock and holding on to it rather than selling it on to first-time buyers, for example. So there's a lot to unpack, but let's talk about what you can do about it. What are the key takeaways? And I'd love to hear your thoughts on what you think about Australia's property market and whether the bubble should burst. Now, the Labor government and Liberal government have both been very clear, because we've got an election coming up, that they don't want the housing market to tank. That's not necessarily good for anyone. That's not good for jobs. It's not good for current homeowners. It would be good for first-time buyers because obviously it allows them to buy a cheaper home as an entry price point. But I think it's a really tough system that we live in where people who are in the market want the market to grow. People who aren't in the market want the market to tank. If you look at the economics and the fundamentals, I think we're not going to see this big increase in supply, and we're only going to see more people enter into Australia's market from a GDP and a per capita basis, that we've got a lot of immigrants moving into Australia. And so we can talk about tax reform, we can talk about lending standards, and we can talk about the supply and demand equation. But I think the truth is you can't control these things. These are all out of your control. We can have the conversation today. You can write an upset comment as well, and you can be upset that other people are buying investment properties if you want to be. But I would take a look at your own situation. What can you control? You can't control how someone else acts, how the government actually puts into place these policies. You can only control who you vote for example, and what you do in your personal finances. And so that's what Emily and I have tried to do throughout our journey. We've tried to be educated. If you can educate yourself on how these systems work, how do the banks and brokers work? How can I get some more borrowing capacity so I can buy some assets? The biggest thing for me is making those steps to start and invest in property has allowed my family more choices than if I hadn't done anything and sat on the sidelines. So I would encourage you, if you're diving into the world of property investment and you want to have a go, start from the start. Go through that journey of starting with your finances, working out your strategy, and working towards that goal each day. A lot of people will want to tear you down along that process or be upset that property can be used for investment full stop. But it's the system that we live in, and I don't really see the Ponzi scheme or the bubble bursting anytime soon. So I'd love to hear your thoughts in the comments below. Are we living in a giant bubble, and do you think it's going to burst? Or do you think the property market is going to continue to outpace inflation and grow over the long term? I'm certainly backing the long-term growth of Brisbane. It's an area we specialize in the buyer's agency. And so if you want to sit down and have a chat with myself, head over to purposeproperty.com.au and book in a free session. If you also want a step-by-step guide on how to start and create a multi-million-dollar property portfolio, we've laid it out for you at a very affordable price point compared to a lot of the other courses out there. And it takes you on a step-by-step journey about starting and building that property portfolio to give yourself and your family more choices in the future. So head over to purposeproperty.com.au and click on course if you're interested in that. Now, give this video a click over here because YouTube really thinks that's the one to watch, and I'll see you in the next one. Peace.